Hi, it's Shannon Stewart with Advanced Accounting. One of the things I hear often are questions about cryptocurrency and the IRS. One thing that I hear most often is, I don't trade enough in cryptocurrency to actually worry about reporting any of it. That's a huge myth. So here is the rule of thumb. If you are actively trading, or you have sold crypto, or you have traded it, or you have exchanged it for another currency, then you have a tax event that needs to be reported on that next year's tax return. So in 2018, if you bought a pizza or a Lamborghini, or you traded one currency for another, that triggered a tax event that has to be recorded on your Schedule D tax return. The IRS says that crypto is actually a property and has to be included in any type of transaction that you've done. Is going to need to be treated as a transaction on your tax return. In 2017, Bitcoin actually was trading for under $1,000, and by December it had gone up to $19,000. And so a lot of my taxpayers will say to me, well, I bought it and I held it. And in cryptocurrency lingo, that's called a hodl. So you hold on for dear life. So I bought it, I didn't trade it, I didn't do anything, I held on to it for dear life. When you do that, when you hold on to it for dear life and you've not traded it whatsoever, you bought it and you held it, there are no reportable tax consequences for that. So that's a different type of situation than just needing to report a transaction of a buying and a selling. For anyone who ignored that slang, that cryptocurrency slang of hodl, and you actually did sell, exchange, you bought something with your cryptocurrency, then you're going to need to report that on your tax return. And the burden of that reporting actually is going to fall on you. So unlike a lot of currencies or securities that are actually traded through a brokerage house, like a Merrill Lynch or a Charles Schwab, you're not going to necessarily receive a Form 1099 in the mail, triggering you to file on your tax return. Now, Coinbase recently has stated that if you have done over $20,000 of transactions within the tax year, you are likely to receive a 1099. That 1099 is also going to go to the IRS, but that'll trigger you to actually put that onto your tax return. Now, even if you don't receive a 1099, that doesn't mean that you're free from the reporting requirements with the IRS. You're going to need to report that on your 1040 tax return. One of the things that I also hear a lot of is that, how does the IRS even know that I'm trading cryptocurrency? That's a really good question, because while we don't know how many cryptocurrency accounts actually exist, it's estimated to be almost 12 million cryptocurrency accounts, even more than Charles Schwab has at their brokerage house accounts. So we know there's a lot of individuals who actually have either opened a cryptocurrency account or are trading cryptocurrency. And one of the landmark things that has actually occurred is that Coinbase was actually subpoenaed by the IRS to turn over account records of their account holders so that the IRS could line up the data to see if those individuals are actually reporting on their tax return. And what's amazing is in 2015, only a little over 800 people actually reported that they had traded cryptocurrency during the tax year. We know there's over 11 million accounts, 800 of them actually reported. So that put cryptocurrency on the IRS's tax radar, that they're starting to look at those account holders that are being issued the 1099s, and those that are actually reporting. So if navigating this world of cryptocurrency trading has got you flummoxed, or you don't understand how it's going to actually work with your current tax situation, please visit advancedaccounting.com, and in the right-hand corner, there's actually a link that you can schedule a complimentary consultation with me. During that call, we're going to talk about your cryptocurrency trading so that you can understand how that affects the taxes that you actually have due currently. But I'm also going to take a look at the last couple years of your tax return and look to see if there are legal solutions or legal ways that you can actually pay less taxes. So we're going to do a little bit of proactive planning for you too during that time period so that we leave you in a better place from a tax situation than what you previously have been in.